Are you overwhelmed by the amount of data indicators that you need to look at to predict market movements? So if that's the case, I want to simplify this. Today I'm going to talk about two very powerful indicators, just two indicators that you can use to understand how this market is going to behave over the next few years. Hi, for those of you who don't know me, my name is Jadu Srikandan. I'm a buyer's agent for property investors, and I buy properties all around the country using a data-driven approach. So if you want to work with me directly, go to my website propertyframeworkbuyersagency.com.au and book a session with me there. Now, we're going to talk about two indicators, which are the sales volumes and the stock on market. And it's really the relationship between these two indicators that we are interested in. It's the ratio between the sales volume and the stock on market. So the ratio is very important in determining how prices are going to move. So we'll use this to identify when to enter markets, when we need to kind of exit markets. And finally, I'm going to talk about a market where this ratio looks really strong and where a lot of potential price growth could occur in the next few years. So stick around till the end if you want to know which market this is. Now, let's get into this one by one. So what are sales volumes? Sales volumes are the number of properties that have been sold over a given time frame. So if the sales volumes is increasing, it means that the demand is increasing. An increasing sales volume also implies that the economy is generally strong, the unemployment rate is low, the job market is improving, and so on. So clearly, the sales volume is a demand indicator. The other one that we're going to look at is the stock on market. So these are the properties that are listed on realestate.com, domain.com. This is our supply indicator, the number of properties available for sale. So we are interested in the ratio between the sales volume and the stock on market, the ratio of demand to supply. So if this ratio is increasing, it means the rate of growth is going to increase. And if this ratio is reducing, it means that the rate of growth is slowing down. That's essentially what you need to understand. So let's look at some markets here. The first one is a market in Adelaide, the north of Adelaide. Let's look at Salisbury East. So this is the sales volume. So you can see that sales volumes was dropping between 2016 to 2020. And then in 2020, sales volume really increased rapidly. Between 2020, it has increased really rapidly, and it's more or less the same until 2024. If you look at the stock on market here, what we are seeing is that the stock on market was steady until 2020, but then since 2020 onwards, the stock on market has been declining. So if you look at that ratio between sales volume and stock on market, you can see that it was increasing between that 2020 and 2024 period because sales volumes were increasing and stock on market was reducing. And now if you move to the price graph, we can see that between 2020 and 2024, there was rapid price growth in that region. From that increasing sales volume, so if you were to enter this market, as soon as you saw that between 20 and 21, you saw that sales volumes increasing, and between 20 and 21, you see that stock on market reducing, you already know that price growth is going to occur, and you know this is the correct time to enter the market. So that's a very clear sign. And now let's look at one more region. This is in Kerwin, which is in Townsville. So again, if you look at the sales volume, you can see that the sales volumes was pretty much steady between 2016 till about 2019. But then in 2019, the sales volume really started picking up and started increasing, right? And it's been around that figure till about 2024. So between 29 to 2024, we can see that the sales volume is increasing year after year. And let's move to the stock on market. If you look at the stock on market, you can see that the stock was steady between 2010 to 2019. And then 2019 onwards, it has been declining rapidly. So the demand to supply ratio has been steady between 2016 to 2019 and has been increasing since 2019, okay, and that's reflected clearly in the price graph. You don't see much price change between 2016 till about 2019, 2020, and then since 2020 onwards you can see that gradual lift in prices in this curving region. So you can see how the sales volumes and the stock on market together can be used to predict how the market is moving. Now let's look at one more region. Now this is in Mowbray, which is in the Launceston region in Tasmania. So if you look at the sales volume between 2016 to 2024, you can see that between 2016 and 2022 it was steady. 2023 there was a slight drop and then it came back again in 24. Looking at the stock on market, you can see that a steady decline between 2016 till about 2022. Stock has been rapidly declining. So what I see from here is that sales volume have been steady between 2016 to 2022, but stock on market has been reducing. So this means the demand to supply ratio is increasing rapidly. And that's exactly what's reflected on the price graph. In Mowbray, price has increased between 2016 till about 2022. And then once that stock again started to increase, we see that the prices have been slightly declining and now have been stagnating. Now, let's look at a region where this is slightly different. Now, I'm going to go into Perth. I'm going to go into the Gosnells region. So Gosnells is a region which is located in the southeast of Perth. It's about 30 kilometers southeast of Perth CBD. So if I look at the sales volumes here, so we know that Perth has been going on and been increasing in value since about 2020. If I look at the sales volumes charts here, I can see that sales volume has been really high all the way till 2024 and then just slight drop off in the sales volume in the last few months. So the last few months of 2024, I can see that the sales activity has slightly reduced. If I look at the stock on market, I can clearly see that stock has been declining since 2020, a really rapid decline between 22 and 24, but just the last few months of 24 again, the stock on market is increasing. So this doesn't mean that prices are going to fall in the Gosnells region. It only means that the ratio is changing, right? And the rate of growth in the Gosnells region is going to change. The rate of growth is going to slow down. Now, that's very, very useful information. Now, we learned when we need to enter a market, and now we learned when markets are going to slow down. So it doesn't necessarily mean that you need to exit the market, because some markets, they go through that minor correction phase and then they come out and start growing again. But we know for certain that the rate of growth is slowing down. It's not very clear whether we need to exit this market at this very stage. Now, looking at one more region. Now, I'm going to talk about a region where I think this trend looks really promising. As promised in the beginning of the video, we're going to talk about a region which looks really strong. Now, I'm going to look in the Palmerston region in the Darwin, right? So as you can see, over the last few years, especially the last few months of 2024, the sales volume in this Palmerston region have essentially doubled. You can see that rapid increase over the last few months. And if you look at the stock on market here in the postcode 0832, which is around the Palmerston region, suburbs in the Palmerston region, you can see that over 2024, the stock on market has actually reduced by more than 50%. So rapidly declining stock and accelerating sales volume. So as we learned earlier, the demand to supply ratio here is increasing rapidly, which means that there's going to be solid price growth going to come in this region. So Palmerston in Darwin, there's going to be good growth coming in the next 3 to 5 or 3 years at least. Now, is this the right investment though, Palmerston? That depends on your risk profile and the type of investor you are. Now, we know that Darwin has been cyclical in the past, so it's not again going to be a long-term buy and hold. So if this is going to be a long-term buy and hold, we have to assess various other factors. But for short-term growth, yes, this market looks really promising. So let's quickly summarize what we learned, right? So when we see sales volumes increasing and stock on market reducing, we know that the rate of growth is increasing and we can get into those markets to enjoy the capital growth wave. And when should we exit a market? Now, sometimes it's not very clear when we should exit a market, because markets could have that second growth phase that happens after it goes through a slight correction. But in general, if we already have seen 100, 150, sometimes even 200% growth, and then we start seeing signs like sales volumes constantly reducing, a very obvious trend. We're seeing stock on market increasing, a very obvious trend. We know that the demand to supply ratio is shifting in the supply favor. This is the time to exit the market. So a very high level overview of how you can use just 2 indicators to really understand how markets can move. I hope this video was useful and you got some value from it. If you want more content like this, then please subscribe to my channel, and I'll see you in my next video.